What I like about this topic is no business and no individual should ever be at a point of do or die given one factor. It should never be do or die based on rate. It should never be do or die based on the cost of labor. It should never be do or die based on the cost of inventory. If you're so fragile that one of the metrics in your business can put you out of business, you should, as a business owner and as a human being, everyone should be nimble. Everyone should operate with the ability to evolve and pivot, and every business. So I think that the topic of interest rates should not be the sole factor in if your business can survive or not.
Well, it's almost, it makes me think, if you're a business owner, look at yourself like a bank will look at you. What are my 5 strengths and 5, where am I at in those categories of cash flow, collateral? Like all you're doing is talking about your balance sheet and your P&L, right? So know your balance sheet, know your P&L. How am I doing managing my business? There's your character. Am I up to date on my debts? And there's your credit, right? So you've got all of those, and then capacity. Do I have enough to survive if crap goes sideways, right? I think that kind of lives in that same role. So all of those, what we're looking at, and we just use stupid acronyms and other words, it's the same thing that you should be doing when you're measuring your own success. How great am I doing in this? How well am I going to be able to survive any type of downfall that comes, whether economic or something in my industry or something in my geographic market, whatever that might be. All right, welcome back to Lords of Lending. I'm Shane Pearson with Stephanie Dunn and Brian Conjolier. Hello, good people. Very excited. Yeah, we've been talking for way too long already this morning, but we're actually today tackling the question that I think every owner is asking, and that is, do I wait for cheaper money or do I move now? And what we're talking about is in reference to the interest rate, the fact that the Fed might cut rates in this coming month, 2 or 3 weeks. How far are we, guys? I don't know, somewhere mid-September. Steph is going to talk to us a little bit more about some of her perspectives on how this SBA loan program is impacting our industry, but also the general small business population. So go ahead, Steph.
I'm an entrepreneur. I want to own a business. What do you recommend? Well, as lenders dealing with the environment that we're in, tightening, scrutiny, prudent lending, buy an existing business that has 3+ years of cash flow, but also be mindful of, did it cash flow when interest rates were high? Not only when interest rates were low, can it weather the interest rate environment shifts? Because this is not the first and not the last time that interest rates are going to fluctuate. Okay. So is this business interest rate proof? Number one. Number two, do you have the operating experience to buy that business and transition into that ownership? And number three, I would say, for me personally, I would tread lightly in the startup space.
Yeah.
And if you're in the startup space, I would say the only way that you could probably weather that startup space would be bootstrap it. Don't borrow too much money at the beginning.
Avoid debt, yeah.
And make sure your debt to net worth is well under 1 times debt to net worth. It's that old takes money to make money. It takes money to start a business.
Yeah.
And so I can't tell you how many times I get a loan application for someone who wants to start a business and they don't have any money in the bank.
Yeah. It's a short end to the conversation when you get to that point right now.
That is a recipe for disaster, because then you know what that tells me? They'll be chasing NCA debt and high interest rate credit card debt here in the next 12 months because you need money for operating capital.
Waiting for a rate cut is, in my opinion, is like sitting at a green light, waiting for the gas price at that corner gas station to go down, and you're blocking the freaking road. Traffic needs to get going. You need to get going. You got to put your foot on the gas. So today's topic is to kind of circle around interest rates, the impact that it's having on our industry, the impacts that it's also having on you as a small business owner. And I think that the more that you begin to look for what other forces are impacting your business, the more you'll realize that what the media is sensationalizing doesn't actually hold you back that much. So Stephanie's going to start us off with some points that I think are a great fit for understanding what the way that we look at that at this kind of particular interest rate change and what impact it has on us from a lending perspective also, just like the true numbers that hit your bottom line.
Well, it's interesting. This whole topic is interesting because we all talk about external factors in our businesses, right? In lending business for myself, and then as small business owners, we talk about those external factors that, quite frankly, are outside of our control. So external factors will always exist, and there will always be external factors that are a part of our daily lives. So does that hold us back from, to your point, getting to where we need to go while we drive our car? No, we still should stay disciplined to getting to where we need to go as business owners and as lenders. But the key to navigating external factors is understanding data behind the industries that we're living in and the real metrics in these small businesses that we own and the communities that we thrive in, and understanding historically where we've been over the last 5 years and where we need to stay focused and where we need to go over the future. And so I think the golden nuggets for us is understanding the key components to entrepreneurship and success is the all of the metrics that we've talked about on a daily basis. Understanding the business you're buying, navigating startups with caution. It takes money to make money. Have cash in the bank to be able to navigate these external factors, and then really understanding those metrics going forward.
Well, Brian, so my question goes to you then. And this could almost sum up the whole freaking episode, is what is the actual impact of a 25 basis point cut that the Fed might put into play on, let's say, $1 million loan?
Very small.
Without answering, I'll give you the math. Okay. I'll give you the math so you can
Appreciate
respond
that.
with me with the answer. Okay.
I was gonna get my calculator out over here.
$1 million, 10-year term, about $140. That's the difference in rate. Let's double check my
Yeah.
math and make sure that the GPT wasn't lying.
And
Right?
on a 25-year loan, it's even less than that. So
Yep.
I think waiting to get in the game until those rates drop a little bit more at this point, you know, where we're at, generally speaking, most people that I've watched, most folks in the finance industry would say that we're probably maybe we peaked as far as rate goes and that we're starting to come back down and that those rates are expected to drop. I mean, the market is generally expecting rates to drop in September and probably continue to drop a little bit more throughout the rest of the year and into next year. So I think it's safe to say, based on all of that analysis that other people who are way smarter than me have done, that we're going to be experiencing some lower rates. So I think with SBA loans, being that most of them are tied to a variable rate based on the Wall Street Journal Prime, you're going to get the benefit of those reduced interest rates, whether you get in the game now or whether you wait. Um, Folks who are looking for more of a fixed rate, obviously that can play against you in a falling rate environment, but even still, probably not that much, um, based on what you could get today versus what you'll get in another year from now. So, like Shane was illustrating, the difference between a 10-year note at 25 basis points higher or lower is not going to be that significant. A full percentage point lower, that might be slightly more significant, but even still, I mean, maybe you're talking 500 to $700 a month on a
Not
10-year.
even a month. We're it's like $150, man. 150
So,
to $200 across both 10-year or 25-year.
so it's not even that significant
No.
at the end of the day. So I don't think the rate should be an impediment to getting into something right now. I think that the bigger calculation is more like what Steph was saying. Am I doing a startup? Or am I buying an existing business? Does the business already make money, or do I want to strap this business with instant monthly obligations to pay a loan back before I've even started making money with it? And I think that's what a lot of what I'm looking at in this data is showing, is that my hunch is that a lot of the defaults we're seeing were from poorly underwritten loans for startup or new businesses who didn't quite have these things figured out. They didn't quite have their money-making mechanisms figured out. And other businesses who were already in business, who were still kind of like we've talked about in previous episodes, struggling from COVID, dealing with other debt, having to refinance debt, get more money to try and grow, and then not understanding how to actually capitalize on that injection of capital into their businesses.
So the word is, I mean, don't chase the rate. You got to really optimize your structure. That's where all of this goes, is understanding all the different elements of your business. And as we'll talk about throughout this episode, and you'll get into this, is understand you need to know the different elements of how your business is run, and that should be impacting your decision today more so than one thing that's being sensationalized by the media, as though it's going to change the world. And the stock market's volatility around that is being driven by algorithms, when all is said and done, of algorithms that are watching the news and playing off people's emotions. So don't use the stock market, don't use interest rates to govern how your day-to-day business runs. Figure out what the heck your pulse looks like, what actually is going on in the day-to-day operations, and work on your business. Don't let your business control you. So I think the ones, Brian, you brought up an example, or you brought up an example, Brian, about how you spoke to a small business owner that couldn't answer some very basic questions of us trying to figure out what's your business health. And I think that's the difference between the borrower who knows how to use debt for growth, and those that are trying to use it as a lifeline.
Mhm,
And if anything, it will really bury them.
mhm. And that's an indication of, in general, small business owners.
Yeah.
He's not an isolated person. He's he's kind of the representative of probably the majority of small business owners that we are trying to lend to, which is why it makes it so tough. And that's a large reason why people fail at getting loans, because they are not prepared. They don't understand what goes into it. And so therefore they don't get the results that they are seeking, because they haven't been able to prepare themselves to get there in the right way.
Well, so then, Steph, maybe my question to you that will be, like, what is the cost of waiting because of something like that? Like, what impact is it having on someone's business if they have been sitting on the sidelines waiting to make a move, waiting to buy that piece of equipment because they fear the debt interest rate that they might take on? So, Steph, my next question is to you. What could waiting actually cost me as a small business owner, as opposed to moving now?
I would say timing is everything. I wouldn't put the pressure on anyone to feel that I need to get in now. Like, now I need to hurry up and get in. I think everyone needs to be cautious about debt. Everyone needs to be cautious about debt, and everyone needs to be responsible when borrowing money. And I think we really have to do those hard internal evaluations on how much is what is my debt to net worth? How much leverage am I really putting on this family? And so I would say timing is everything, in terms of, it shouldn't be a race. Not a sprint, it's a marathon. And I think, interestingly enough, as we talk about this topic of interest rate, 1 or 2% fluctuation, either way, shouldn't make or break anyone. It shouldn't make or break your home mortgage payment, and it shouldn't make or break your business mortgage payment. My theory over the last 5 years, actually, and this could be our next topic, has the question in my mind is, are we overpaying for everything? Did those businesses the last 5 years, and the businesses that are for sale today, that I feel rushed and need to hurry up and buy, is it overpriced? My theory is, I tend to lean more towards thinking everything's been overpriced the last few years. And so I don't think the pressures have solely been these interest rate hikes. I think we're paying more for stuff than we should be paying. And so when it comes time to thinking about your timing, look for those acquisitions that are priced fairly and correctly, and don't necessarily take the comps as the correct timing basis, right? Because I think everything's been overpriced.
So don't buy the hype. Don't get sucked into the hype. Everything is a freaking hype these days.
Yeah.
Instagram owns the hype world with every influencer that's out there trying to sell you some new course, some new idea, some new philosophy
And
on
hurry up.
going and buying a business. Yeah,
And
it's
hurry
I
up.
think it will cause you more hell if you don't actually take the time to be methodical on how you approach that. Granted, you're talking to the guy that doesn't like to wait. Brian knows this. I'm one who goes in and has to clean up the collateral damage a bit later, and, I call it
Mhm.
I'm gonna rip this off from that Will Smith movie, the collateral beauty of it all. All the ugly that I created with my going too fast, because eventually I get to the finish line, but holy crap, I screw a lot of people up. But, go with that a little bit. But I honestly still think that delay it's one of the most expensive line items that really doesn't show up on a P&L. I don't like how people I don't like just waiting for the sake of waiting, and I think sometimes that hurts me, but other times I think within business and the ability to execute on decision and entrepreneurship in general, it can be a superpower if you know how to execute. If you know how to just get out and make a freaking phone call and sell instead of thinking about selling or trying to find somebody else. No, 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 just go do it. Do the hard work, make the uncomfortable decision, and then figure it out as you're in motion.
Well, I think what you're touching on there, Shane, is the whole um, fail fast test and fail fast concept, where when you're in business, you really need to focus on testing your hypotheses constantly so that you can be getting data and getting that feedback so that you can then make more informed decisions, and tracking all of that stuff. So I think that that's extremely vital for a business to understand those sorts of metrics that you're talking about. But
No, it's valid.
it stems from that concept of, hey, I got to test this out. Should we raise our prices? I don't know. Let's try raising prices on these 5 things, or let's try raising prices for the next 2 weeks and see what it does. And if we still see, the same level of demand, we haven't seen any decrease. Okay, maybe we're good. Maybe we can raise them more. Constantly testing. Hey, is this marketing working? I don't know. Let's test it out. Let's run 1,000 and see what we get back.
Well, if you're chasing a quarter point interest rate at this point, you're chasing $150. Is that worth waiting, or can you get out and go make 2 sales and make up that income just by making a phone call? Right, like, that's the difference when all is said and done, and getting out there and just trying something different and seeing what the impact is. So, I think you nailed it, Brian.
Well, and
Alright, so
if you can't
go
make
ahead,
your
Steph.
mortgage payment because of a $150 difference, you have a more fundamental issue with that business.
Preach, sister. That's it. Alright, we've had a great discussion today. If you've liked what we said so far, be sure to follow and subscribe. Steph, finish us up.
But all this stuff, guys, has me fired up. So you know what I think the future of small business lending is? We've come 180. It will be being prepared. Okay, so this was the end of it. Okay. So my closing remark is the average American household is at a record debt. Banks are tightening. Uncle Sam himself is paying more on the federal debt than we are on defense. How scary is that? What does this mean for you? It means resilience is everything. If you run a business, you can't wait to see what the Fed does. You need to be proactive. Model both scenarios. Get bank ready. Position your company to weather high rates and low rates, but be able to move fast when cuts do happen. Because this environment, the winners aren't those who can borrow. There are those who are ready when the money is available.
Stop staring at interest rates and look into your business and figure out how to actually get it moving today. Put your foot on the damn gas and drive through the green light that's been sitting there for the last year and a half, and everyone's blowing past you.
As
So
you're waiting for opportunity, are you ready once opportunity presents itself?
there it is, ladies and gentlemen. Thanks for tuning in to Lords of Lending. See you next time.